Good evening, Garage Gang. It's Wednesday, February 11th. This is your nightly recap. And if I were you, I'd sit down, shut the door, turn off whatever garbage is playing in the background. It's bond auction week, and I know you still feel the burn. First off, if this is the first time you're pulling into the garage, smash that like right now. Hit subscribe. We don't do hype in here. We don't do hopium. We pop the hood and show you the parts, one engine at a time, one viewer at a time. Tell a friend, tell your cousin. Tell that guy at work who keeps checking his Coinbase at lunch and pretending he's fine. He's not fine. Send him here. This is where you learn what's actually moving the money. Now let's talk about what happened today, because this tape didn't just sell off. It buckled. It folded like a transmission that's been grinding metal for 3 weeks and finally threw a rod through the block at highway speed. Bitcoin, 67,800, down 3 days straight. Ethereum hanging on to 1970 like a man gripping the edge of a cliff with 2 fingers. Solana at $80 flat. I'm sitting in the lot like a repo car nobody wants to bid on. The Fear and Greed Index printed a 6 tonight, a 6. That's not fear, that's a flat line. That's the EKG machine making one long beat while the nurse looks away. The RSI hit 15.9, lowest since 2015, over a decade of data, and this is the most oversold Bitcoin has ever been in your lifetime. And the 200-week moving average, the one level that held since this entire bull run began, cracked today. Like a windshield on a gravel road, first time below it, first time. Now, before I show you what's underneath all of this, here's what hit the wire today. Rapid fire, no analysis yet, just the tape. The U.S. House passed a bill to end Trump's tariffs on Canada. White House advisor Hassett went on the record saying there is plenty of room for the Fed to cut interest rates. But the market said not so fast. Traders just pushed the first fully priced rate cut from June to July. The U.S. recorded the lowest job growth in 2025 for a non-recession year since 2003. The dollar popped after the January jobs report topped expectations. U.S. stocks closed lower. Dow snapped a 3-day win streak. Mattel crashed 29% on an earnings miss and weak Barbie sales. People literally stopped buying dolls. Palantir down 35% since Michael Burry entered his billion-dollar short. Elon Musk's X just announced it's generating $1 billion a year from subscriptions. And Binance CEO Richard Teng told the panic merchants to sit down. Institutional Bitcoin holdings stable at 1.3 million BTC, with another 43,000 coins added globally in January alone. Read that list again. Half of it is screaming recession. The other half is screaming accumulation. And the market is standing in the middle of the intersection trying to figure out which bus to get on. That's the game tonight. Financial system kept grinding gears. Let's talk TradFi, because if you're only watching crypto, you're staring at the exhaust pipe and ignoring the engine. The Dow snapped a 3-day win streak, closed lower. And the reason it closed lower is the same reason your Bitcoin is bleeding. The January jobs report came in hotter than expected, and the market had to reprice what that means for rates. Traders fully priced in the first Fed rate cut by July now, not June, July. 1 month further away than yesterday. That doesn't sound like much, but in a market that's been front-running rate cuts since October, every month of delay is another month of expensive money. Another month of 4.5% risk-free yields, making everything else look like a bad bet. Hassett at the White House says there's plenty of room for cuts. The administration wants cheaper money. They want it badly enough to say it out loud on camera, but the Fed doesn't work for the White House. The Fed works for the data, and the data just said not yet. Mattel crashed 29% on an earnings miss and weak Barbie sales. People stopped buying dolls. Let that sit for a second. The American consumer, the engine that drives 70% of GDP, is pulling back hard enough that a company built on plastic toys just lost a third of its market cap overnight. That's not a Mattel problem. That's a demand destruction signal. Everything else gets the wood chipper. Cisco dropped 7% on a mediocre forecast despite beating earnings. Cloudflare popped 5% on AI security demand, the one bright spot. Palantir, down 35% since Michael Burry entered his billion-dollar short. 35%. That's what happens when valuation gets so far ahead of reality that gravity doesn't need a catalyst, it just needs time. The MOVE index sitting at 62.74, anchored near 2026 lows. The bond market is calm, too calm. The stock market hasn't noticed yet. And crypto, sitting at the bottom of the risk waterfall, gets hit last and hardest when that gap closes. Japan, keep one eye east. Prime Minister Takaichi won the election. She's a monetary easing advocate, but the yen is weak. If the BOJ signals any move toward tightening, the yen carry trade starts unwinding. And global liquidity contracts. Eurozone GDP prints Thursday morning, low impact on its own. But if Europe is slowing while the US runs hot, the dollar catches a bid, and that puts more pressure on every risk asset priced in dollars, which is everything in crypto. The bond market is the driver's seat right now. Not equities, not crypto, bonds. If you want to know where Bitcoin goes, stop watching the Bitcoin chart. Watch the yield curve, watch the TGA. The crypto chart is the passenger. The bond market is driving. Something much bigger is happening underneath all of this. This isn't just an earnings season. This is an infrastructure war, and it just escalated. Big tech committed over $650 billion to AI infrastructure. That is Sweden's GDP in server racks. You do not deploy that kind of money unless you believe the next decade belongs to AI. And right now, AI demand is outrunning physical reality. We are running out of power. AI models don't just require code, they require electricity, massive amounts of it. And the answer from Silicon Valley, put the data centers in space. SpaceX just filed for a 1 million satellite orbital compute network because we've already started running out of room on the ground. We are talking about leaving the planet to find enough power to run the models. Here's the chain reaction nobody is showing you. When AI surges, data center demand explodes. When power grids strain, capital expenditure goes vertical, and infrastructure becomes the bottleneck. That's where this story starts being macro. Now, here's where it gets dark. The AI safety report for 2026 just dropped. The headline, rapid capability growth with emerging risks that outpace our ability to contain them. The models are getting smarter faster than the guardrails can be built. Claude Opus 4.6 was bypassed in 30 minutes. The agentic systems that are supposed to be the future of autonomous work can be broken by someone with a laptop and half an hour of free time. That's a structural vulnerability announcement. Enterprise AI didn't reduce workloads, it increased them, sped employees up. AI was supposed to free us. Instead, it put us on a treadmill and cranked the speed. $650 billion in spend, power grids maxing out, water tables dropping. This is today. Now connect this to crypto. If centralized AI infrastructure hits physical limits, distributed networks stop being an experiment. They become a release valve. Decentralized compute, storage, bandwidth because it's necessary. When centralized systems choke, the market routes around them. AI agents transacting with AI agents cannot wait 3 days for ACH. They need instant, programmable, trustless settlement. That's where Ethereum becomes interesting again. Not because retail is excited, because machines will be. BlackRock launching a staked ETH product, that's positioning. AI is forcing the largest infrastructure build out since the internet, and crypto isn't competing with it. Crypto is plugging into it. That's the surge, not noise, not hype, architecture. And architecture moves slower than candles. But when it locks in, it reshapes everything. Now let's get back to the asphalt. Bitcoin, 67.8, 3 consecutive down sessions. February 6th, 60,000, capitulation. February 7th, 60 to 72, biggest bounce. February 9th and 10th, rejected at 72. Sellers absorbed every bid. February 11th, 70 to 66. The comeback died on the operating table. The 200-week EMA at 68,000 is now resistance. The chassis cracked. You can still limp to the shop, but you're not racing, not until it's welded. Market maker positioning, buy walls at 65,000 to 65.5, 63,000 and 60,000, and the big one, 640 million in order book depth. Market makers defending the floor above 68, sell walls thick, buying dips, selling rips, farming the range. Between 66 and 68, void, thin liquidity, stops hunted, breakouts that become traps in the same candle. If you're in that zone, you're driving a dark mountain road with no headlights. Don't. Ethereum 1970 below 2000 sustained below the gamma flip at 21.45. Solana $80 highest beta. Solana breaks 66.5. Solana tests 75. Penalty box until the macro clears. 72-hour outlook, 3 roads, 1 market, base case, 50% PPI in line. Bitcoin bounces 66 to 68 and gets sold. 1 to 2 weeks of chop. The grind. Bear case, 30% PPI hot, 10-year yield spike. Bitcoin breaks 66.5, cascade to 63, then 60,000. If 60 breaks, air pocket to 57.8, nothing below. You don't trade this scenario, you survive it. Bull case, 20% PPI cool. Bitcoin takes 68. Shorts cover, 265 billion in sideline stable coins start to move. The coiled spring finally releases. If it hits, the move is violent because there is nobody left to sell. Tomorrow morning, 8:30 a.m. Eastern PPI. Hot print means yield spike and crypto drops through the floor. 1 p.m. Eastern, 25 billion in 30-year bonds. That's the double barrel. If they clear clean, ride the bounce. If either one misfires, step aside. AV dashboard, 53 million at health factor below 1.2. The whale, 28.4 million. Health factor 1.0. Flatline, one more dip and that loan detonates. 1 cascade, 1 rewrite of the order book. Cash is the position. Patience is the edge. Discipline is the only thing standing between you and the people who already lost. When 265 billion in stable coins decides to move, you'll know. Until then, you wait, you watch. We don't chase in this garage. We check the oil, respect the machine, smash that like, hit subscribe, share this with your fellow Deegans. We build this garage one viewer at a time. Engines hot, safety off, let it rip.